This is David Patrick Fitzstock Charts market video update for July 17, 2019. We are in a 15-day uptrend that is stalling, and it's been stalling all week. The gaps have been faded every day, and the market has been heavy. When I say the market, I'm talking about the ES, S&P 500. It's been heavy since Monday's gap up, and that's normal. We're going to look at the charts in a moment, but 2012 historical chart pattern comparison continues to give us ideas of where the market's heading, but it does suggest a bumpy road, but eventually a grind higher. That's why at least I feel it's important to stay long, but also you need to pay yourself. When you're in a 15-day uptrend, you have to pay yourself. If you're not paying yourself, eventually the market pulls back and then you don't have profits. So I paid myself. I came in 122% long this week. I scaled SPXL. I scaled TQQQ. And what I do today, I put money into the Dow, the industrials, because they're leading. I define my risk. And just like always, I put all my trades on Twitter. My entries, my stops, my scales, my ads. Because you have to have a game plan and a backup plan. Your backup plan is your stops. You have to know where your stop is before your entry. You have to. You have to trade like a robot. My line in the sand, and by the way, the line in the sand that comes on the daily updates is more for swing traders. You know I'm not a swing trader. I'm a hybrid trader. I normally use previous day's low as my stop for entries. If I don't, I post on Twitter if I'm using a wider stop, which I am on UDOT. We'll get to that in a moment. But I'm using last week's lows, which are the quote-unquote pivotal lows the week before OPEX. If we break those, the market's going to get sloppier, which is hard to imagine because it's been extremely sloppy this week. So that is my line in the sand. We'll get to those in a moment. I believe I calculated 249 trading days in the year. So let's just say we're a little over half. So maybe we've had 130 trading days, approximately. We have 139 options that have doubled. January, February, March, April, May, June, July, and August contracts. That's more than there are trading days in the year right now. The numbers are, they're huge. 38 triplers year to date, 298 triplers since we launched service, 1,082 doublers, some up 2, 3, 4, 5, 600% since we launched the service back in 2013. These numbers continue to grow. They're all based on simple price pattern that repeat themselves. We use rules of engagement, we use stops, we use ads, scales, and we scan, I scan for historical chart pattern comparisons, which give us a huge edge. Here's our 2012, left, right. Right is 2012, left is 2019. Bull flag on the Dow, bull flag on the Dow over here. Is there more meat on the bone up to this, 61.8? I don't know. I think so. That's the reason why I put money in the Dow today. But it doesn't matter what you think. You're trading price pattern. If price pattern is giving you an edge because you have rules of engagement, you're an uptrend, you have historical chart comparison with weekly confirmation, you have an edge. That doesn't mean you're going to make money. You have to define your risk. What am I defining my risk on all my runners and my new existing trades? Well, there's my max pain right there. Last week's lows, 7-9 lows. If we break that, the market to me gets sloppier. Why? Well, there's a lot of reasons why. Let's change time frames here and look at why I think it could be sloppy if we get down there. Okay, so look, let's get rid of these fibs. Okay, let's get rid of everything here. Cleared line. We just broke out. The market broke out the new highs with weekly MACD confirmation. All right. If we come, there's the old highs. If we now come back down and we would break here, does that mean the market's going to cave in? We're going to see a 29 crash? No. What it does tell you, it's a failed breakout. That doesn't mean we can't go resume higher, but it does say things will be sloppier. So we don't know where the market rebounds. If it rebounds here, if it rebounds here, we don't know. It becomes a guessing game of where the market will rebound when it rebounds. So that's why, to me, it's a very simple trade. You define your risk, worst case scenario, last week's low. If you break that, you get out and you wait for the market to heal itself, to show you more clues, to give you a trading edge. Right now, in the short term, I'm not sure we have a quite trading edge. You're looking at the Dow Jones, the S&P and the Nasdaq have pulled back the 10 SMA. The Dow Jones hasn't even done that yet. So it might do that the rest of today. It might pull back. I don't have a great cost basis on UDOW. I bought late in an uptrend. If it works out, it works out. It doesn't. But I treat every trade equally as far as my allocations. Right? I wanted to get some money, and I got in late to the industrials. And now I'm exposed, and now I have defined risk. It really is that simple. If you're overthinking things, you will lose money. You have to keep things simple. Let's flip to, I think that was all I want to talk about with that, was, did we talk about year-to-date, our numbers? 268 different stocks from our focus list. This does not include my personal trades that I post, which are supplemental trades on Twitter. And we know I've batted very well with those. But 268 from our focus list, 3 no scales, 24 losers, 241 winners. I think it was an 89.9% win. I rounded to 90%, which is absolutely insane to have a 90% win rate. Okay, let's get back to the market. This is tricky. This is very tricky. So before we get into all our stocks, I want to talk about our uptrends again. We know we had an uptrend here, right? We know we had an uptrend here, right? We got knocked out of trend. We got uptrend here, and an uptrend here, and an uptrend here, and an uptrend here. It's a lot of uptrends. Got paid on all of them, besides this one that started the year. Got paid on all these uptrends. That's big money. What do we do here? Now it becomes extremely tricky. Intraday, the market was telling you it wanted to touch the 10 SMA since Monday. We faded, and then the market, there's been sellers every day. It's been very apparent. So I suggested book and profit. I came in 122% long. I did book some profits. I didn't get great prices, but I booked profits, SPXL, TQQQ. Allocated money to UDOW because it's the strongest sector right now. It doesn't mean it's going to continue to be the strongest, but it's money I wanted to allocate to. But now that we're looking at the SPX, this becomes very tricky. We know our entries, right? And we know our stop. Worst case scenario for me is last week's stop. But what does the market do from here? No clue. I'll be honest with you, I have no clue. If we would continue on historical chart pattern comparison, then you dribble back higher, right? We're breaking trend. I pointed out the MACD was flat yesterday. Now we're seeing a MACD bear cross, and you're breaking trend. Depends on where you close. So breaking trend with a MACD bear cross, that's 2 bearish indicators. We also talked about how we didn't have sector leadership. We've been talking about that for all week long. We'll get the sectors in a moment. The SPX is a difficult trade here, and that's the reason why I took money out, put it in the strongest sector. If we're going to go higher, I do feel industrials will lead, and if we go lower, I get stopped. It's real simple math. Nasdaq, this is, here's our triple top, right? You don't want to break back below this, and there's in my opinion, you don't want to have a stop below that. If we break back below those pivotal lows from last week, it does not suggest Armageddon. It suggests sloppy-er trading. I don't want to be a part of sloppy trading. I want to be a part of those 90% win rates. In sloppy trading, you're talking about 60, 40, 55, 45 win losses. I don't want those. I can go to Vegas and get my 50-50 anytime I want. Or 49-51 or whatever. You don't even have 50-50 in Vegas. I don't want to gamble. I'm aggressive in the stock market. I bet or place trades based on odds. Odds based on historical chart pattern comparisons, based on price pattern that has paid in the past and continues to pay in the future. So, what's the Nasdaq doing? Same thing. I pointed out this yesterday. The MACD was flat. It's even getting weaker. Does that mean the market has to go lower? No. It means caution. It doesn't mean we can't go higher. It doesn't mean the market's going to melt down. It means caution. Be careful. We don't know. All right? Could rebound huge today. Could get knocked out of trend today. We don't know. So we're cautious. XLE continues to be in a bear market and grind lower. Does not look good. Oil futures back down below the death cross. Does not look good. Financials just can't seem to break out. And this huge wedge pattern that I posted for now a long time, we just can't get out of the wedge. And the upper part of the wedge would be a 52-week high. We look at FAS, there's its wedge, and it did get to a 52-week high. And now it's coming back. It's getting knocked out of trend. So what do we have? We don't have financials. Once again, I talked about this. We don't have energy. Do we have transports? Well, we had transports engaged off our ESFL, I think here. They paid, we scaled, and what happens? They get knocked right back out of trend if we close down here. So that's not giving me a whole lot of conviction to be ultra long, which I'm not right now. I'm only 92% long, right? Let's look at small caps. Are small caps paying? No, they're doing nothing. They're doing nothing. So we don't have small caps. We don't have oil. We don't have financials. We have transports that are all over the map. What about our biotechs? No, they continue to look horrible. So what do we have? We have the Nasdaq, which is fine, and we have the industrials, which is fine. But the fact that we don't have more sector leadership is the reason why this market's drifting lower all week. I'm not the only one that realizes that. All right? We need sector leadership. We either need the oils, we either need the banks, or the biotechs. We need something. Can the market continue to go higher just with the Nasdaq and just with industrials? Yes. But it's going to be a grind. It's going to be sloppy. It's going to be bumpy. It'll be a little bit frustrating. You want to see sector leadership. We don't have that right now. Gold, that looks actually pretty bullish. The problem is you don't have MACD, but that does look like we're on new highs for gold. TLT bonds, it looks like MACD's flattening out, and this is going to set up long. It's obviously normally not bullish for the stock market when you see oil and bonds like that. Let's see, do we have any leaders anymore? Well, what's going on with, let's highlight some things here. Here's our MACD. What's going on with MACD? Absolutely nothing. What's going on with price? Absolutely nothing. Is Apple telling us anything? Apple's telling us nothing because MACD and sideways price. You can say the same thing. I'm not going to draw all of these, but you can see right here and now momentum indicator flat to down. Amazon's the leader. It's losing momentum. Netflix is now in a downtrend. MACD bear cross. That was an old leader. Booking, bearish MACD right at the 10 SMA, zero momentum. Tesla actually looks pretty good. It can grind up to that 200 SMA pretty fast. Is it a leader? Absolutely not anymore. Facebook stalling. Once again, I'm not going to highlight them all. You can see MACD flat to lower, price sideways. So we just told you that we have sector leadership in the Nasdaq, and now we can't even find a stock that looks like it wants to lead anymore. Google, I believe their earnings coming up, very difficult trade. Nvidia. These stocks in semiconductors, we do need them. Texas Instruments is pulling back. AMD pulling back. Micron pulling back. We're not even seeing that sector leadership, which we absolutely need at this point. OLED is one of the few stocks that actually looks pretty good in that sector. Xilinx looks okay. Avgo, no. Okay, so we don't have semis. We don't have FAANG. All right, we're going to start looking for some kind of sector leadership. Microsoft was a big leader. It just broke trend. Oracle just broke trend. It was a huge leader. Adobe looks very, very, very good. So we got one stock now out of hundreds. Coop looks very, very good. Now looks okay. So we got Adobe and Coop. CRM, Workday, no. Jobs looks okay. Not enough to be a leader. Splunk looks okay. It's not showing any price trend confirmation. Very difficult trade. So we got two stocks right now that possibly, we talked about Shop. Shop is going to 52-week highs and then some Shop. So we have three stocks so far. Roku actually looks pretty good. That could be our fourth. Snap, Twitter, no, no, no. Expedia, what's Expedia doing? Actually looks okay. It's just very slow. Momentum indicators are flat. Baba looks all right. Could short squeeze. Baidu, very flat. NTES. Cena, we're getting some slow dead here. Cena, nothing. Let's see if some of these other big leaders from before. Vive, no. Cyber, I think, is having a good day. That actually looks pretty good. Well, that'll be our fifth. VMW looks okay. Not leading, but does look pretty decent there. eBay, Palo Alto looks pretty good. That'll be our sixth. Not leading, but does look very good. So that's 6 stocks so far. GoDaddy looks good. We'll give that 7. What about Visa, MasterCard? They're starting to lag. Citigroup, JP Morgan, Goldman Sachs, very, very, very flat, all of them. BlackRock, CME, the exchange stocks were leading. They look like they're falling back asleep. So we have only 6 out of all these stocks we've looked at so far. About Fiverr continues to lower. Square looks okay, not a real leader. Dropbox doing nothing. Anything going on in oil? I don't. PSX is a grind higher. CBX, ExxonMobil. I don't see anything in that sector that looks exciting on the north side. If anything, those look like they're shorts. What about the casinos? Las Vegas. They look okay. I think Las Vegas Sands probably looks the best of them. CGC, Kronos. Cannabis looks horrible. What about biotechs? I expect them all to look flat, and so far they do. So we have, I think, 6 or 7 stocks that look okay. They look pretty good. What about CMG? That looks decent. UBNT. Okta was showing up on the radar today. That looks pretty good. That'll be our 8th. Okta. Twilio looks pretty good. Twilio looks like it wants a 52-week high. I'm going to give that 9. IQ, Lyft, and Uber. They both look flat. Lyft actually looks okay. Price strength confirmation above here to add. And if it's not an ESFL, what is that price? Why am I not getting the prices here? Oops. Let's see if I can do this again. Why are they not showing up here? Oh, there they are. I'm sorry. High 66. Sorry, 66, 64, I believe. Yeah. Okay, so we just named about 7 or 8 stocks. Normally like more than that. You don't always get what you want. 7 or 8 stocks that I would like. And I think they're good buys, and I think they could lead. We still need more. If we don't get more, we're going to see a lot of this. What happened this week, just up a little bit, down a little bit. The S&P just goes Grindville. It's in Grindville right now, just grinding nowhere. And nobody's really getting paid swing long the SPX right now because it's not moving. Getting paid to outperform the SPX, and that's what the ESFL is all about. Stocks showing relative strength. They're showing specific price patterns that are outperforming the market. And we just talked about those 8. So real fast, let's flip to the weekly, see what the weekly tells us. We don't have new highs with MACD, but MACD's heading in the right direction. We are in an uptrend, so the weekly still looks fine. What did the weekly look back in 2012 when they were in that same time frame? Right about in here. Weekly was not at new highs, but you were in a sustained uptrend. And where is the 10 SMA on the weekly? It's way down here. So that's what, 2,900. So it's way below the market, but that is rising. Last week it was 28.97. This week 2909, 97.312. So it should be 29.25 roughly next week, and going up at 12, between around 12 handles a week. So it's going to take some time for that weekly 10 SMA to catch up to price. So in summary, what's going on in the market? Well, right now, we're worried about the market getting knocked out of trend, right? I don't trade based on being worried. I already knew where my stop was when I entered SPXL and TQQQ up in here. I already knew where it was. I had my selective ads, and I've scaled that. I already know where my stop is in my new UDOW position, And so I already know I'm not worried about anything, because the only thing you would ever have to worry about is a gap down below your stop, and you can't control that. When that happens, you just get stopped. Everything else is just a trade, right? We're defining our risk versus last week's low. If that happens, you get stopped out, and you have paid 5 uptrends this year. There'll be another uptrend, all right? So define your risk, trade like a robot, keep emotions and opinions out, use the rules of engagement, use your scales, use your ads, and use stops. They work. The methodology works. Look at the 90% club. Look at our numbers. Have conviction in what you do. That's all I have on the market video update. Have a great day.